Good afternoon and welcome to the FX Daily Roundup here with ForexAnalytix, and we'll move this out of the way. We've seen the dollar continue to go in and hold in here, and I'm looking at you with the cable is that the pressure continues to remain here, but we'll go into the dollar index quickly. We'd talked about this in the European crossover webinar, which is available at 4 a.m. Eastern daily. And if you're not available during the European hours, Stelios records that. It makes that available about an hour and a half before the New York Open. So you have the opportunity to go in and watch that, where we go over the intraday levels that we're looking at for the market here. We've seen a pretty good move also here on the Aussie dollar, and we'll go on and get to that. But you can see we're bumping the lower part of this upper trend line. We talked about that, where we had adjusted right here to include this body, because that was a significant fall and a pretty good strong rally off of that. So you can see we're bumping up against that, and we ahead of the 4th of July holiday. We do have, it's going to be relatively quiet. We've seen that. And with the cash dollar index, we did push the resistance potentially up to 96.92. We talked about that. I didn't even think it really get past in the 80s, but still we had to go and allow for that. There's always can be a little bit of volatility associated with that. But right now we're kind of holding our own here. Obviously, a lot of this has been predicated on, because you can see other pairs, just like, look at the dollar CAD, what's going on there. We talked about that the other day, but we're going to move into, be just a moment. This is what continues to move the dollar index, i.e. via the euro, because the euro is under so much pressure, is right here with the bunds. You can see another new all-time high, or correspondingly all-time low in rates, high in price, here with the bunds. And we had already made a very big move, and this is what kind of sunk the euro on Monday. The dollar index had come out of the G20. It was, had a little bit of a bid, nothing spectacular. But it wasn't until the bund was really starting to fall that we saw the euro really come under some pressure, and then continue to get that pressure. And we saw that again today. Part of the take was that with the nomination of Lagarde for ECB chief, or ECB president, however you want to call it, that she has the same dovish philosophy as Draghi. So we'd see continued pressure on the euro, and that really allowed for the bunds to make another higher price, obviously new corresponding low, and that's translated into the weakness in the euro. We'll go into the main chart, just one moment, or our main screen. And the euro's just trying to hang in here. Be honest with you, it's actually holding up better than you probably would think. So we'll go here to the euro. And this is on the daily. And let's pull up our bias chart. We kept the resistance, the support, the same as yesterday, 1262. And actually the resistance, because we had this, remember how that was a key area on the way down, this 1326, when we came on to the European crossover on Monday morning, actually bought right there. It actually dipped a little bit lower, but it was holding there, and that was a good area. And we did rally back up to about 1360, and then the market turned around and ran out of gas, or actually I think made up to like 50 or whatever, upper 50s. I think we missed the resistance at that time by like 2 pips or something like that. But the euro slid back, and we closed below this 1326. Hence why this was resistance, and you can see that's where we rallied to yesterday. Although we fell short about, what was it, like 4 pips, and then we came back down and slid back down. Well, the key thing is, and we're back here once again saying it's all about 1262. If you're looking, for the euro, we really need to go and hold this area here, and we are doing, actually considering new all-time lows again in the bunds. Probably I would have thought we may have even been down here into the 1230s actually. So it's actually holding up a little bit better. We mentioned this in the European crossover, we had attempted to form an inverted hammer, and we'll maybe looking to try and do maybe the same thing along the line. So we'll see. But of course, we do have non-farm payroll coming up. Certainly going to have its impact that we're going to go and see on Friday. But of course, with holiday trading, it's going to be a little bit light nonetheless. But the big mover, and we talked about this on the European crossover webinar, has been the Aussie dollar. Now, I'll go into look in here at the daily chart, and with Blake out, I did do the basic technical analysis for the majors. And one of the things that we talked about, or let's say I posted in that, and like I said, if you're a subscriber with ForexAnalytix, you get that analysis, the basic technical, along with Elliott wave and harmonics, different disciplines. But I had posted on there from last evening, hey, look, we had rallied here because this is what the key area we're looking at. You can see the basic technical from the weekend. Finished the weekend as best levels, but major resistance is 70.27. Beyond a 70.70. A pause is likely in order with support coming in at 69.60. So that's exactly where we came in, and we were holding at that time yesterday morning, which was the 69.60, and we've kind of held in here. When I did the analysis last night, I said, hey, look, we're marking our time, but the market's holding up pretty good, and I'm looking potentially for a close above 70.27. We know this is a huge level going all the way back, and we're looking on the daily chart. Pull this back further. You can see all these touches in here. So significant. And that's why I expected coming into the beginning of the week for that to be a resistance and us to pair back. But now you can see I was thinking, hey, look, if we can get a close, and I was, felt good about the Aussie dollar. It had held up really well. The door was open. I thought potentially for this to move higher, that if we can get a daily close above 70.27, then we said, hey, look, next target is going to be this 71.23. And that's not even saying a lot. It really isn't, because if we secure, my guess is we could maybe push this up in here, and then we maybe come back, and as long as we hold that area, then we'll probably eventually make a run, much higher, closer to 73 cents. But that's for a later day. But we are holding up very, very well. One market that is has got a pretty good stretch and is pairing back a little bit further, though, is on the Kiwi. Now, we did have a phenomenal run here, and we had this as our initially as our bias chart support. We actually moved that a little bit lower with the potential that we could push a little bit lower today, but it's coming back again. And you can see we ran out of gas at this key level, 67.25, which confluence with the 50%. We'll see what happens, but boy, it's already had a phenomenal move. I would have thought that we probably would have eased back just a bit, maybe under a little bit of pressure, and then we see what we could do. I was more confident with the Aussie. Both of them are doing very, very well. Moving on to the cable. Well, look, there's just no love for the cable at this point. It's really going through some tough times. We talked about the significance of this 27.34 before, and 2 Fridays before, we actually closed above it. It looked like we could actually start to maybe potentially challenge to 28.02 and better, but we quickly lost the steam, even though we followed through with some higher prices, and then we just started to sag. And right now, from the basic technical analysis we did, we're looking for potentially a move down here to 25.26. I kind of, when I came on the European crossover, we actually talked about this area right here, 25.57. I liked it right there, and it's actually moved, but it's only moved up like, what was it, 17 pips. But I think we actually, put the bias chart support down here, so at least we could all know what the actual risk level is on this, because that's potentially down here to 25.26. But I like that area right there because we'd already come back, but certainly the pressure still remains. You can see here with the exponential moving averages have been on an outright sell, and look, the cable just can't get any love really for any of the sterling pairs. We'll go in and take a look here with the dollar CAD. And this has continued to go on and remain weaker. We actually put our bias chart support today here at this 30.43. We think that we'll get a move down to that level. Look, on the way down, our target was looking for a move to, previously was 31. We actually were looking for this market to come into 31, 36. And I think that was our target when we were way up in here. But as we move lower, I said, hey, look, that's going to be a good support area. 131 is going to be our target to be looking at. Well, as we dipped down in here, we saw just a bit of a bounce. We actually had moved our bias chart support, I think at the time at 26. And we held and we slipped back to like 15. I remember getting long and adding and spinning out of that. But I hung on to the one for this 31.27. And boy, did it come under some pressure. So when we rallied back, this was our resistance that we're looking at, which was, you can see here, beginning of the week, resistance is going to be 31.36, followed by 31.92 if they could scale back there, because look how oversold it was. But I had kept that and I spun out. I spun out about, I think it was like 31.18 or whatever, because as I mentioned in the webinars, it had been like the weak sister. So even when the dollar was doing, coming back, it still couldn't get over 31. And then when the dollar made that extra lunge because the euro was so weak, finally, we broke above, and I just was not going to go and hang around. And you can see we quickly slid right back down again, and our bias chart support is looking here for 30.43. Even though the dollar's making its gains against the euro, because against other currencies, it's not holding up as well, if you look at that. You see what I'm saying? Another case in point here was with the dollar yen. Take a look in here. Let's go to the daily, because it gives us a little bit better perspective. I just wasn't sure what the dollar yen was going to do after it reset 676. And but the one thing that has held here and has kept this marketing cap, you see the slower exponential moving average. It has provided a ceiling now. To me, I think we're a little bit overdone with the yen. We're looking for that move. And I tell you what, like I said, I could have kicked myself other than a couple of scalps in here. And I might have done something here. I don't remember. I didn't even catch any of this move down here. So that was, rather frustrating. Matter of fact, I mentioned, I think on the webinar earlier this morning, that I'm going to have to go in and I believe I'll have to do, especially in the type of trading we are. Sometimes it's slow. Sometimes it's not. It's a little bit faster. Try to do a little bit of mix of holding and, scalping and short-term trading, because I was looking for this market to move down here and I did not benefit from any of it. So as we started to move up, I'm like, I don't even know what this market really wants to do, but it certainly came back under pressure. And once again, other than the exponential moving average here providing a little bit of a ceiling, I just don't know. We had our resistance at the beginning of the week at 858, coming into the basic technical, and that's before we even opened up. So pair remains bearish with an update resistance at 858, provided an opportunity to reestablish shorts. Well, the high was 854. But like I said, having missed all this, I wasn't one to just jump in. I thought we might be able to even push up a little bit higher. Thought, okay, that might dip a little bit. Maybe we'll chance a little bit higher. But we did finally slide in here, so I don't have a good take on what this dollar yen wants to do at all. So we did see, like I said, look at the Aussie dollar. And like I said, I thought that, there's a potential for this to move higher. Now, let's move into the cross rates. And this Aussie has laid a world of hurt. I'll tell you what. We had done the, look at the Euro Aussie. On the European crossover, I even posted this chart. I was like, look, this is a big daily level, 16.95. Well, as Amanda said, man, they went through those levels like a knife through butter. And look at this. That's a big level there, folks. And, once again, next expected it to hold and then rally. But you expect to see some short covering, and because it's a daily level, we could overshoot a little bit. This thing, like Amanda said, went through it like a knife through butter. But of course, like I said, the strength of the Aussie, and then on top of that, the weakness of the euro has really compounded that and really pushed lower. We've now generated a sell signal, and got to give props to Amanda, because she would have remained bearish. I've traded this a couple of times. The thing I didn't like is that, once again, you'd have to hold it. Sometimes, as I mentioned, you'll get into areas where the market will kind of hold and it wouldn't be doing anything. And then all of a sudden, finally, you want to go and break and go with that momentum. And that seems obviously the way to go. But Amanda had stayed short, and props to her. I saw one trader, pretty well-known trader. He's been bullish, and I remember taking shorts up in here, but I didn't hold on to him for very, very long. But I wasn't sure, because it's certainly if you look at it from a technical standpoint, hey, that thing had closed and it was opened the door for higher. I think he was saying he was looking for 68 cents. I'm like, well, my my own perspective is very much short-term oriented. But I got to give props, like I said, to Amanda, because she stayed bearish and just added on, and boy, has this come to fruition. That being said, let's go and take a look at the AUSSIE here. Same thing here, obviously pushing a little bit higher here with the AUSSIE. Let's go and take a look at it here on a daily. Next target we're looking at here, I'm looking at 76.19. Let's see what we have with the bias chart. I myself haven't done very much at all with the cross rates. We had 75.84, so we're just about there right now. 75.84 is actually where we had our bias chart resistance here. Lastly, I'm going to close out with gold. It's one I hadn't traded in a while, and you know that I've been looking for 1438, and we had just ticked that out and took it out by a little bit, and I didn't participate really in any of this. But on the way back down, I was really confident, and I've been, you know, barking at the moon all last week about that I thought we'd get to 1390, and I had the opportunity to go in and get that long as we came into Sunday, and I got very, very fortunate, to be quite honest with you. Yesterday, I ended up taking a third off, and be honest with you, I almost bailed out of all of it as we made this move up in here. And I thought to myself, look, you've already hung in this long. This is going to be nuts because this thing could really start to go and move. But my concern was the strength of the dollar. But we talked about it. Gold doesn't always move so much with the dollar. Gold's moving on the predication of lower rates. So I took a third off here. Well, as we moved higher, I saw it come off in here. And I'm thinking, okay, well, I'll let it run. I don't want to jump out too early. Next thing I noticed, I didn't even see any of this till when we opened up in the next session, and like, holy smokes, and I got out. Well, I probably could have even maybe jumped in and scalped it. There's no way I thought we would have broken back down here like this. But to be quite honest with you, it made my month here in the gold market. But we've had a pretty phenomenal run. I'm pretty surprised how quickly it's receded. So that's got me a little bit scratching my head. Other than, like I said, I'd missed this move or most of it, you know, not really participating. I hadn't done anything with gold in quite a long time. But I was really adamant that I felt that this was going to be where the market was going to go to. It certainly didn't look like it wanted to go to that last week, but I thought we'd get there to 1390. So, and nor did I expect this to recover this quickly. Haven't done anything with it. Not sure what I want to do with gold right now. I'm kind of leaving it alone. I'm kind of sitting okay. Got a euro long, which I'm kind of crying in my soup about, but we'll see how that plays out. I still think that we'll get a cut. But I'm okay with that. With gold kind of took care of me. Look at this euro Aussie. Oh my goodness gracious! It's the old, you know, the submarine horn honking, and we're just submerging. Same thing here you're seeing with the euro against the Kiwi. Obviously, both the Aussie and the Kiwi are not only moving higher per se, but then the euro is moving lower with its pressure. So certainly you're seeing these extended moves here. And same thing, Guppy still. Oh God, just still swimming at the bottom. So about that, anyway, that being said, that's all that we have. Obviously I'll be out tomorrow for July the 4th. And, but if you're with us, European crossover webinar, if you are a member with ForexAnalytix, you can see us live in that webinar, which we set up the scalp levels for the day and get prepared for NFP, we will. And like I said, if you're not available, Stelios does record that. Also, may want to consider that, as I mentioned, 10-day membership for $1. Also, check out our partner, Forest Park. They can assist you in trying to locate a broker that meets the specific needs that you have, whether it's going to be for you know, medium-term trades, or if you're a scalper or short-term trader, and if you can go on and get money back. Now, if you're in the U.S., you can actually get credit towards your prescription. You might be a subscription. You may be even able to get ForexAnalytix for free, and like I said, an excellent trading platform that we have, including real-time news, or real-time for the news events and economic reports. That being said, thank you very much. And for those of us here in the States, enjoy your July the 4th. Have a great rest of the day trading, although it is rather quiet.